Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. All right, everybody, welcome back. Good morning, good afternoon, wherever you are in the world. Thank you for being here on another live stream, trading gold, indices, and Forex live. So, hope everybody had a nice weekend. We've got a busy start to the week. We've got some moves happening. Gold is ripping higher here again. Take a look at gold's price up 2.3% after tagging that 50% retracement zone. You can see buyers stepped in pretty aggressively, clearly around this area with a big, strong body daily chart candle pushing north here as we speak. When it comes to gold, the question is this, was that it? Is that all the pullback we're going to get? When we take a look at a percentage basis for what the gold chart did, that is about an 8.6% pullback. And that is a pretty healthy pullback distance, right? So when it comes to gold here, could this have been the short-term bottom? Possibly, right? You guys know, if you've been watching me, if you watch my Sunday video, you know I'm pretty neutral on gold right now in terms of new entries, bullish longer term, but kind of trying to pick my battle here, trying to be selective with my entries. And I do like a lot better this 61.8% retracement level, but it's possible that I missed the boat. We might be headed north and I might have missed that trade. It happens. Check it out in the office today. Krispy Kreme donuts. I skipped on the donuts, but the coffee, good coffee. Anyways, real quick question for the audience, very, very trading related. Dunkin' Donuts or Krispy Kreme? Let me know. What do you guys think? Dunkin' Donuts, Krispy Kreme? I have a controversial take on that one. I'll tell you what, I think most people for donuts would say Krispy Kreme. Coffee, maybe Dunkin'. Maybe that's a fair middle ground. But I don't know. Can I join the office? Are you in Atlanta? And do you have experience in social media marketing? Crispy, definitely. Okay. Starbucks. See, I think Starbucks is like bottom of the barrel in my opinion. Not a big Starbucks person. Wife Duncan, me Krispy Kreme, aka I never get it anymore. Con, you're a good man. You are a good man. That's how it goes. Us husbands have to, we have to stick together and accept that happy wife, happy life. You know what I mean? Anyways, yeah, no, we got Krispy Kreme in the office today, so I am enjoying my coffee. What are you guys watching this week? Let me know in the chat really quick. What are you focused on? You got all these markets moving. You got NASDAQ down 1% today, S&P 500. These things have been crawling back, right, from the depths. Big push lower and then bouncing back. Where are we at with that? Is that going to continue? What do you guys think? Let me know. So comment what you're trading, but I'm just curious. Like, give me this, like Euro USD bullish, or give me like gold bear or NAS bull. Like, drop that in the chat really quick. I just want to see what's the sentiment like out there today with the crowd. Let me know. Bulent, good morning, my friend. I joined the A1 family last week. I bought the EdgeFinder Pro and VIP Gold Discord membership. Now I open up the EdgeFinder and I say, let's take a look at the top setups algorithm in your style. Cheers, Bulent. Shout out Bulent and anybody else who picked up a copy of the EdgeFinder during this sale event we've been running. Just so you know, it is our lowest price that we do all year long. And, I can tell you something. One of the coolest feelings I've ever had in my life. Also, we got to look at this when this is not working just yet, but stay tuned. One of the coolest experiences of my life has been when I scroll through Twitter or Instagram and somebody I don't know, some random trader post has the EdgeFinder pulled up on their screen. What that does to me is very cool. I'm like, that is the coolest thing ever. Because it just goes to show the EdgeFinder is not, it's a very diverse tool. Like, it's useful for many different things. If you're a day trader, a scalper, a swing trader, a long-term investor, the EdgeFinder is a data sourcing tool. And so when we see people using it for its intended purpose, just to get more insights on the market, it is a really cool feeling. So shout out to everybody who picked up. I know Ballout also picked up a copy. Shout out Ballout. Some of our long-term viewers here, Malent, Ballout, you guys picked up EdgeFinders at the dip. Your timing was pretty exceptional because, again, here's the full transparency on the EdgeFinder, right? The EdgeFinder is usually a $1,400 product. It's a one-time payment, right? It dipped 45% off to $770 one time, and it is going back up. So if you have not picked up a copy, this is what the chart looks like right now. And it's a guarantee. In markets, you don't get a guarantee. But in marketing, you do kind of get a guarantee. So I'm telling you, the price of the EdgeFinder is going back to its normal price very soon. So don't miss it. If you've been waiting, it is $770 US, and you can split this up. So you might say, oh, I don't have $770. No problem. If you value our tools and you're like, I see the value, I just don't have that money, split it up into 3 payments. We do offer that. Send us a DM. If that's something that you're interested in, we'll drop a link here in the chat to where you can send a direct message to our support team about getting a copy before the sale ends. So dollar index is lower here this morning, guys, which is good for my euro dollar long idea. So I am long the euro. We'll get to that in just a second. But we didn't quite get to this 38.2% retracement. So let me just tighten up my levels here. So you can see we did not quite get to this 38.2% retracement zone before price already started to sell off. Now, to get granular with this, right, what I'd like to see would be to see some break of this structure here, right? That's a pretty significant level that you can see. We put in this low, we came in, put in a higher low. And some people might say, well, isn't this an inverted head and shoulders? I would cede that to you if you get this move. If you get this move, then yes, I would call that an inverted head and shoulders, and price action would be flipped bullish. But what have we actually done here? We've just consolidated, right? Look at what price has done. It came down heavy, put in a low, and I only would consider this a higher low if it was followed by a significant higher high. And we did wick up into this area, but we didn't close decisively above the previous high. So I would give this kind of just a consolidation phase where we currently are with the US dollar. Is that bullish or bearish? Well, price action wise, I would just say it's mixed. But fundamentally speaking, taking a look at our economic surprise meter, change the name up on this. I feel like it's more intuitive with this name. The economic surprise meters will show you how surprising the economic data has been, positive or negative, for your favorite currencies. So if you're a currency trader, this one's for you. The eco surprise meter, like if we take a look at the US dollar, you can see that it has been surprising to the downside. Like economic data has been downbeat. It's been less than impressive. The UK has been impressive compared to forecasts. Europe's been mixed. Australia's been surprising to the upside. New Zealand's been surprising to the upside. Canada's been surprising to the downside, right? That's the way to read this map. And so it's not based on price action, right? This is not saying, oh, the US dollar is the strongest. I know everybody sees those, metrics. I wanted to look at, and, Frank from our team designed this. He did a great job. we wanted to look at economic surprise, positive or negative, for different currencies. So when we look at this, we say, oh, the US dollar. Let's talk about our weak points here of the majors. Canada, the Canadian dollar looks a bit weak compared to forecast. The Swiss franc looks a little bit weak compared to forecast. Japanese yen, borderline weak. But let's keep stuff in the red. So here's our in the red, in the red, in the red. What about the blues? Pound. Euros mixed, so we won't touch that one. New Zealand, Australia. So how do we read this? Well, we say the pound against other currencies looks strong, and we could actually marry this up, right? So what this would tell me, in a nutshell, I could basically, as an FX trader, I'll tell you this. If I traded only FX, this is pretty much what I needed. Like right here, this is all I need for fundamentals. I don't even have to look at the data. Now, I will look at the data because that's what I do on this channel. But I'm telling you, if I was just a retired dude who traded FX and didn't really care to look at this stuff for very many hours per day like I do currently, I would look at the economic surprise meter, and that's pretty much all I would need for FX. I would say the UK, Australia, and New Zealand, their economic data has been surprising to the upside, so I'm going to have a bullish lean towards those particular currencies. And for the bears, so I would say pound versus dollar. I would say pound versus Canadian dollar. I would prefer to take the winner in that. Pound versus Swiss franc. I would say Australian dollar versus Swiss franc, long bias. Aussie CAD, I'd be long biased. Aussie dollar, right? AUD, USD. See how we're doing that? We're just crossing strong versus weak bases based on economic surprise. Does that make sense? I don't know if that resonated or not. So do me a favor. If that made sense, type yes or put a 1 in the chat. I just want to make sure that what I just said didn't sound like super confusing. I do sometimes rely on the audience to let me know that the way I express an opinion or a thought actually resonates or actually makes sense, because if it's confusing, I would rather know so I can explain it better next time. So again, we're just looking at the economic heat maps basically in summary. Right now, the US has been pretty downbeat. Last week, we had a lot of jobs data that was not super impressive. Now, the NFP report was good. Like, don't get me wrong, that was strong for the dollar. But then that's where it ends, right? ADP was a miss. Job openings were a miss. Jobless claims were a miss. Wage growth was a miss. These are weak things for the US dollar, right? So Rob, thank you very much for the 100 rupees. I appreciate the donation to the stream. It's going right towards our coffee fund, although today coffee was free in the office. We had our landlords had coffee in the lobby for everyone, which was nice. By the way, James Chandler, go get yourself some coffee if you haven't already gotten some. So Rob says, hello, Nick. Hope you're doing well. What are your thoughts on the Swiss franc? CPI came lower than predicted today. Been in Kiwi Swiss longs since last week. So let me take a look. Kiwi Swiss long. So you're bearish Swiss franc. So I like that sentiment. Let's see. Did our data come in? Yes, it did. So there's your thought process right there. Right? I can pull that up just for reference. As you pointed out, this was bearish for the Swiss franc. We had actual CPI year over year came in today at 0% inflation. That is much lower than expected. Now, less inflation is bearish for the currency, as you've properly pointed out. So well done on your analysis. Kiwi Swiss, NZD, CHF. Let's pull it up for Sarab. Thank you very much again for the donation to the stream. Appreciate you on that. Yeah, I think what you have here, and I did this currency pair in my Sunday video. Also, just curious if anybody watched the Sunday video. Like, I don't know what that video, and I don't get a lot of views on my channel. Like, I do get good views for the trading world, but we had 30,000 views on my Sunday video this weekend. That's like way more than usual. A good Sunday video is like 15. We had 30 yesterday. And one of the things that I noticed from the comment section, and please let me know, because I'm trying my best this year to put out content that is as beneficial to the trading community as possible. It serves me well. It serves the community well to get my content to do better. That's just the truth. And one of the feedback points that I kept seeing was people were thrilled that in my Sunday video this past week, I did way more charts than usual. Like I did everything. I did Kiwi Swiss, Kiwi dollar, Euro dollar, gold, silver, oil, Bitcoin, S&P, NASDAQ. I gave a much broader list, right? And that seemed to resonate well with the audience. So I don't know. I think I'm going to try and take that and put it more into my content. Anyways, Kiwi Swiss, from a bullish perspective, you've got some work being done here, like higher lows. That looks good, but you are coming into this downward trend line. So I'd be cautious there. What I'd be looking for on Kiwi Swiss would be this move. This would be, to me, a very strong catalyst for price action continuing higher. I believe actually that Kiwi Swiss, if I'm not mistaken, is actually a bullish setup on the EdgeFinder right now. Yes, it is. Kiwi Swiss is a bullish reading on the EdgeFinder at this time. So that's a trade I may actually join you in, Sarab, if you can get some kind of break and retest of key resistance here, right? So you have resistance pretty clearly defined here. Downward trend, daily chart downtrend. Like I'd be cautious at current levels, but if you can get this kind of move, I'm very interested in Kiwi Swiss longs and may actually join you on that trade. So I like it a lot, especially with Swiss franc inflation coming in soft. I like the trade. Well done on that one, and we'll see if it can continue to break higher. So, Lee someone crashed into the back of your Jeep. Sorry to hear that, man. That's no fun. So, Jeep Wranglers last an eternity. That's awesome. I drive a Jeep Rubicon, and I like it. It's not great on the highway. That's the only thing I don't love about it. And I do drive a good distance for work right now. So I don't love it on the highway. It's pretty loud in my Jeep. But like for around town, I absolutely love Jeeps. They're like the most fun thing to drive around town. I have a 4-door, so it's not the, super swivelly 2-door Jeep, but I still really love driving it. Anyways, guys, I'm going to keep going through some charts, but let me just really quickly ask for if you have any question for me on the stream, maybe we could have a link dropped in the chat about where you can ask a question. If you guys have a question for the stream, please feel free to drop it in the chat at any time. I'm sorry, not in the chat, in this form that we're going to drop here a link. Chandler or James, if one of you guys could do that for me. Take a second, fill out this questionnaire, and then your question will be featured on the stream. It should be a good time. They might be going to get coffee. Hold on. Questions. Here it is. I got it. Found it. If you have a question, use this link to drop a question to me, and I will pull that up towards the end of our stream today. It's going to be fun. I love doing the questions in the chat. It's really fun. What was I going to say? Shoot, I had something I wanted to share with you guys, and then I blanked on it. Anyways, feel free to ask a question to the stream if you would like to. Taking a look at the NASDAQ, I do think that we're a little stretched here. I'm looking for pullbacks. I am bullish, but waiting for a pullback specifically to this 19,200 level. We took over this level, and I'm kicking myself because I missed the retest entry, and it kept going without me. But I do think that there's a good chance that we still could see a retest of this area in the coming days. If we don't, I miss the trade. The alternative would be if we break through here, pull back to this area, 20,400 or 19,200. Both of those levels look attractive to me for possible entries on the long side of the NASDAQ. I am getting a strong reading on NAS and on the Dow Jones, bullish plus 12 reading for the Dow Jones and on the NASDAQ. So really liking the indices on the long side and going to keep an eye on those ones. Bitcoin's also on the list, but really look at this Dow Jones score, plus 12, right? That's a really strong reading. So I may be looking to join the trade here. In fact, you're actually getting a possible retest pretty soon on this Dow Jones chart. You can see if we go from our trend line here, we broke through that trend line on Friday pretty confidently. Now seeing a bit of a retracement down into this area. So going to watch for continuation plays. Even if it's a brief pullback, I'm probably going to look to buy those things on a dip pretty aggressively, not with huge size, but aggressively in terms of not needing a huge pullback. I just need a pullback. I like the NASDAQ better. So I'm going to watch both Dow and NASDAQ. I like the NASDAQ price action quite a bit. So indices are definitely on the watch list for me. Let's take a look at a trade that I'm in currently. Euro dollar longs, which dropped down to neutral. So I'm not loving that. But let's pull it up anyways. By the way, gold up 2.4%. Really impressive move there. Euro's up 0.5%. It hit a level for me that I've been watching for. I went long on Thursday of last week on this candle. We are now in profit on that euro dollar long position. My plan is to do one of two things. Either I'm going to take profits pretty quick if we get a push back up to these previous highs. This would be considered my target, if you will. In fact, let me mark this up. So my target is this area. Let's do target. So this area, I'm looking for a push back up into this region. If we get that, I'm looking to take profits on the move. And if we roll over bigger, I'm going to look for a second entry around 1.09. It's a good bit of ways, but I'm dollar cost averaging on euro dollar to the long side. No stop loss. I know, absolutely crazy, but tiny positions and willingness to actually scale into this trade. And if it completely fails out, then I'll close out of the trade. Let's see. What else do we have on the list? The Russell, really quick. Let's just do that one. I just want to see what's happening with Russell. Russell's down 1%. Tagged resistance here. Would love to see this one do this kind of move. Possible long side trade could be interesting there for Russell. Let's see what else. Kiwi, NZD-JPY is another one that's on the list. We talked about NZD-CHF. Taking a look at NZD-JPY. Similar price action here. Would like to see this kind of move for a possible long side trade or this kind of move. Both bullish. EdgeFinder confirmation looks good. Nick and James, dollar cost averaging gods. Dollar cost averaging is absolutely controversial for a good reason, because people who abuse dollar cost averaging blow accounts like no other. But if you have really, really slow and steady conservative approaches to dollar cost averaging, it can be a very, very consistent way to approach the FX market, especially since FX tends to do this over the long term. Dollar cost averaging can be really good. Again, you can mess it up though, because you might say, oh, I'm going to short right here, but you short really heavy. And then this move, even though you ultimately were right, you might blow up big time before the market kind of resurges back the other direction. Another currency pair that I've been watching, I think Alan is in the chat today. We were talking about euro pound at one point. We need Ivan for a stock market rally. Alan, I agree. We need him. We need him right here. So, what's up? What's up, Ivan? Hey, we missed May the 4th, right? May the 4th be with you. That was yesterday. So euro pound, I think it was a bearish setup. It still is. Yeah, so bearish setup on euro pound. This is an interesting one for me. I'm a little cautious on this one simply because we just tagged the 618 retracement. I would like this one to, on a longer term basis, like take a look at the weekly chart. When it comes to FX, I'm way more like long term focused. I'm not really looking to like scalp intraday or anything like that when it comes to Forex. So anyways, had this huge rejection at this area, kind of missed that area. But if we do go back and retest that region, I'm going to probably look for sells up in this area of resistance, a long-term level of resistance with small size, as always, right? So euro pound shorts, definitely one to watch for me personally. What's up, Cameron? Thank you very much for the $2 donation to the stream. Do you play Wyckoff setups? And if so, what do you think about CAD JPY. Let's take a look. CAD JPY, pull this one up for us. CAD yen. Let's take a look at the daily chart. So Wyckoff Springs, I don't really, they don't like play a key role in what I do personally, but I'm well aware of what they are. And, they've been around for decades. This idea that you have a big level of resistance, for example, like let's say you have this resistance and we were to do this kind of move, then this kind of move. We would call that a Wyckoff spring. The idea is the stop loss placement of many traders getting hit, right? So liquidity, all that concept is nothing new. It has been around for decades. Wyckoff is one of the biggest people I know in the space that has pioneered that many, many years ago. Actually, when does like Richard Wyckoff's like what? Like 80s, 70s? I don't know when that was pioneered, but concept is this, right? Big level of resistance. Stop losses are likely clustered around here. Big fake out, reversal, liquidity grab. Do I trade all that stuff? No. Because while it does happen, right? There's no question that does. It doesn't happen predictably and every time, right? Otherwise, you would never have support and resistance would never be a thing. If every time there was a support and resistance level, right? Maybe they fake it out on the next one. Maybe they do. But that was like 4 instances where resistance just held as resistance before the one manipulation kind of moment. People obsess over that stuff. And while I don't think that it's like useless to learn about and to understand, I think obsessing over it is a big trap that a lot of traders do, right? They focus so heavily on like, I need to make sure I'm not sweeped, or I don't want to be someone's liquidity. And you're going to be someone's liquidity sometime. It's going to happen. Just humble yourself and just say, look, sometimes my entries aren't going to be great, but I can't really advocate heavily for something like that because it did not make a difference in me becoming profitable or not, right? I use, in terms of technical analysis, what you pull off the shelf at the library. It's like a 60-year-old book on technical analysis, and it shows you like the simplest support and resistance break and retests. That's how I enter the market. And it works great for me, right? In combination with fundamental and sentiment analysis, that's all I need. I don't need to obsess over liquidity sweeps and put a fancy name on technical analysis patterns, right? To me, that's a big old waste of time. Focus on learning fundamentals and sentiment, and you'll understand why the market's moving and where it's likely headed next. And then you're not going to sit around watching 47-hour-long YouTube videos on fancy names for patterns that have been around for 150 years, right? Or longer, right? You can go that route. If you want to, paralyze yourself in technical analysis, go for it. But Alan says my trading is boring. My trading is so boring in terms of the actual execution. Fundamental analysis I find to be exhilarating. I love learning about it and exploring it and understanding why markets are moving. But the actual execution is so boring, so simple, and we don't draw up we don't paint a picture every time we're going to take a trade. That is so deceiving in my opinion. That's fun to think about, mapping out a very elaborate technical analysis reasoning for why you're taking a trade. But that's all it is. It's fun. It's not very practical because, again, you want something that's simple and repeatable. Simple and repeatable doesn't involve drawing an entire mosaic every time you're going to take a trade. Are you kidding me? Right? We have to do something simple and repeatable and approachable. And at the end of the day, what moves the markets is not head and shoulders patterns. I say that all the time. There's nothing against technical analysis. I use it myself. But we want to be using, in terms of guiding our directional bias and looking for great risk to reward setups, obsessing over technical analysis is a trap. I'm telling you. I don't know how else to say it other than this. When you go to YouTube and you search up best trading strategy, what do you find? Endless videos about how to use this certain technical pattern or certain indicator to predict where price is going to go next. Very rarely do you hear people talking about understanding the CPI report, understanding the jobs data that's coming out, and how that is likely to drive market trends going forward. And ironically, while all the technical stuff that you can find on YouTube is easily available, that stuff, to me, is a lot of time wasted. Now, again, there are great simple, like you could have a really simple, to me, the way you enter the market doesn't matter that much. Like that's the truth. Like the straight up truth. You could tell me I look for a MACD crossover. Cool. Use a moving average crossover. Cool. Trend line breakout. Excellent. Support and resistance. Great. I really don't care because that to me, how you enter and how you exit is just your framework for how you manage risk. But trading directional bias, from my experience and listening to the pros, I'm not, I say this, I know many people have heard me rant about this before, but I'm going to say it again. Turn on CNBC, turn on Bloomberg for a second. I'm not saying listen to the talking head reporters. Listen to the fund managers, the most successful people in this industry, and listen to what they have to say. And don't listen to me. Prove this to yourself. Turn it on. Listen to what they talk about. And you tell me, are they talking more about trendline breakouts and Fibonacci retracements and support and resistance? Or are they talking about business cycles, business financials, the economies of other places, the Federal Reserve, what the central banks around the world are doing, what inflation is doing, what commodity prices are doing? Don't take it from me. Go listen to these pros talk about this stuff. If you want to be a professional basketball player, are you going to learn from the backyard, guy who's like thinks he's the best in the world but has never really made it that far? Or are you going to listen to Michael Jordan? Right? Obviously, you're going to listen to Michael Jordan. So when you listen to the pros, what are they talking about? And by the way, I'm a YouTube trader. I'm not the highest level of professional in this game. I've reached a point of profitability in my trading, but I'm not the greatest of all time. And I'm okay with that. To me, I think actually it's an empowering thing to say, look, I just want to be a profitable trader. I don't need to be the Michael Jordan in order to be profitable in the markets, but go listen to people I have listened to. And you'll realize that's what they're focused on. They're not focused on technical analysis. They're focused on fundamentals. And most people don't like hearing that because they realize fundamental analysis is multiple years of learning this stuff in order to get a grip on it. Okay, so that is a rant that I do often on my channel, and I know somebody just heard it and they're like, oh shoot, something just clicked in my head. I've been chasing those best trading strategy videos for years, only to realize that there is no simple technical. If it was that easy, everybody would be doing it. If there was some simple pattern that anybody could program into their computer to spot, everybody would be doing it. Does that make sense? Again, I'm trying to give you the real shindig, if you will. Anyways. Learn fundamental analysis pretty quick from you, Nick. You're great at breaking it down. Appreciate that, Bashy. Yeah. Don't forget to add the EdgeFinder discount after preaching. Cedric, got you on that one. So that is where the EdgeFinder came into place. At the end of the day, I just mentioned that I had that revolution personally many years ago that, oh my gosh, the pros are talking fundamental analysis. But here's the problem that I very quickly ran into and where my business came from. I have a background in software engineering. And so I put one and two together. I said, okay, they're looking at fundamental analysis stuff. They're looking at the economy. They're looking at all this stuff. But how can the average everyday trader look at that stuff? That is where we built the tools that we have. We said, okay, we want to look at economic data reports and market sentiment, what institutional money is doing. We want to be able to look at that stuff, but how the heck can the average person do it? Well, you could read articles all day long and do it for free, but you'll drive yourself crazy. That's what I used to do. It was so time consuming to try and map this stuff out manually that we automated the process and built the EdgeFinder. It's 3 years since we launched the tool, and here is your pitch. The EdgeFinder is 45% off right now. It's a tool that combines all of the key metrics that we look for to try and track what the Fed's going to do next, to try and track where the economy is headed next, the real stuff that moves the markets. And it's currently 45% off. So if you're interested in getting some information about the EdgeFinder before that sale ends, again, I know it's a sales pitch, but it's a tool I think traders need. I genuinely think it will take you to the next level if you are trying to be a fundamental analyst. And I mean that wholeheartedly. Yes, I'm selling you something, but it's a tool I think you should probably get. Just like TradingView, is a wonderful tool that I think the premium version is well worth if you're a serious trader. I think the EdgeFinder is another tool you should add to your list if you're a fundamentalist in the markets or trying to become a better one. So if you want 45% off, our sale is ending very soon. Send us a direct message using this link that just got dropped in the chat. Do not miss that opportunity before the price goes back to its normal price. It's almost half off right now. So anyways, I asked you guys a moment ago if you have any questions to drop them using the form that we just dropped. And I have a couple questions ready from you guys that I'm going to take a few minutes to answer. So thank you for anybody who dropped a question. Appreciate you for doing that. Let's take a look. Okay, we got several. So I'm going to try and jump through these here before our next segment starts on the show. Our first question comes from Crow Axer. Their primary goal right now is to improve their trading psychology. They do own some of our tools. Shout out to you. Nick, I'm 16. I use the EdgeFinder for fundamental analysis. You're 16. You have a copy of the EdgeFinder. You're a beast. Awesome. Congratulations on, being well ahead of at 16 years old. What was I doing? Gosh, I think I was like a swim team coach or something. I was cutting grass. That's what I was doing. I was cutting grass and swim team coach at 16. So you're doing great. Use the EdgeFinder for fundamental analysis like GDP, inflation, interest rates, and COT data to guide my trades. Do you think it's worth getting a job just to dollar cost average into the S&P 500 during this correction? Or is that not the best use of my time right now? So at 16 years old, absolutely, you should get work experience, get as much income as you possibly can. I think anybody who doesn't have, $100,000 plus sitting in the bank should find extra work, find new ways to deposit more to your trading account, start a business, get a second job, do something to increase your income so that you can find ways to invest it. Absolutely 100%. Many traders try to trade small amounts of money into big accounts and they keep going broke because they're doing that. Great traders recognize that slow and steady wins the race. And that means not trying to make a bunch of money quickly. It means finding new income, building it up over time, scaling it using the markets, not trying to generate $1 bajillion from the markets. That's greed. That's overestimating what the markets can do for you in a short period of time. Use the markets what they're intended to be, a long-term way to grow existing money. So great question. Shout out to Croaxer, 16 years old, getting into fundamental analysis, looking to pick up a job. Salute, you're doing great. Tamello, 1 to 3 years is how long they've been trading. They're looking to learn more about fundamental analysis right now. And despite not reaching your targeted 148 level for dollar yen, do you think that the bullish momentum is over? No, I'm not going to pull up a chart on it, but I know what you're talking about, that downward trend line on the daily chart. Still think we have a little room to squeeze higher on the dollar yen before I would jump into any trades. Richie's been trading 1 to 3 years. Their goal is to become a funded trader. What do you think about trading USD CHF? I've been along since Wednesday before this past Wednesday. Dollar Swiss, I'm not a big fan of. Just because, again, it's not on my list of the Swiss franc pairs specifically. I like Kiwi Swiss, and that is pretty much it. That's the only one really on my list right now. That's taking a strong versus a weak currency on our surprise index. Take a look here. We have Kiwi, once this thing loads. Kiwi is looking strong relative to forecast in terms of economic data points. Swiss francs coming in soft. So I love Kiwi Swiss longs, but dollar Swiss longs I'd be neutral on. Probably would skip that trade personally. I mean, you have your own system. By all means, I'm not here to tell you what to do with your trades. I'm just sharing what my personal approach would be with this one. Carabo says they've been trading for 1 to 3 years. Their primary goal right now is to find a profitable trading strategy. I just got out of school last year, and I'm now transitioning to becoming a full-time trader. I wanted to get some advice on how to advance and become profitable to provide for my family. So if you're not yet profitable, this is the news that you don't want to hear, but you probably need to hear. You should get a job. You should absolutely not be trying to trade for a living or to provide for your family when you're not yet profitable and you are just out of school. You should use your career or use your degree, get yourself some work, build up capital, trade on the side, and don't rush the process. That's my opinion, right? If you try and jump into just trading and you don't have a lot of capital and you're just getting started, you're trying to provide for your family, Trading's not it. A job will provide for your family for now. Once you have significant capital built up, trading could potentially eventually provide for your family, but it's a long-term goal to be able to trade for a living, and doing it right out of school is not something I personally recommend. Yeah, I would say increase, just like what I said to Croaxer, right? Increase your income, deposit to your trading accounts, scale it up, learn stuff. Don't rush the process. Loris says they've been trading for less than 1 year. Primary goal right now is to become a funded trader. I'm in this 2 weeks. I missed 3 really good trades, one on gold, S&P, and one on the Kiwi dollar. Instead, I tried to chase 2 of them and eventually lost money, risking 0.5% of my account on each one. If I did everything right, I would have been almost up 3 to 4%. How do I stop this mistake? Right. So at the end of the day, you can map out a trade perfectly. You can have the greatest setup possible, and it still can result in losing money. So your risk size, I would say, is great. 0.5%. Most traders who are new are like risking 5% per trade, and they don't realize they're making a silly mistake. So 0.5%, I'd say you're doing a great job there. In terms of your system, I would make sure that you really backtest what you're doing. Make sure that you have a rule set, and before every trade, do your checklist. Does this trade meet this criteria, this criteria, this criteria? Is my risk meeting this criteria, this criteria, this criteria? Then execute, and understand that no matter how well you map out a trade, mistakes are going to happen, losses are going to happen, losing streaks are going to happen, winning streaks are going to happen. Okay, so just something to think about. Bethel's been trading for 1 to 3 years. They do not yet own any A1 software, but considering it in the future. Their goal right now is to find a profitable trading strategy. And their trading related question is, what is the easiest way to trade trend lines or read trend lines? So trend lines are challenging because they're subjective as anything, right? I could draw a trend line like this, right? The next person could draw a trend line differently. Let's say that the next person trades using the very extreme levels and they get this trend line. Or the next person comes in and they trade only the candle bodies, in which case, you have a trend line here, then you have another trend line here. So trend lines, while useful in my opinion, they're not useless products. They are subjective and people draw them differently. And there is not a quote unquote right or wrong way to draw trend lines. People draw them differently and have various levels of success and failure. So trend lines are a simple tool to add to your analysis. They are not, in my opinion, the end all be all for trading, strategies. Now, I'm not saying that they can't be useful or that you can't incorporate them into what you're doing. You absolutely can. Just something to think about. Last question here from Rosemary's been trading for 3+ years. Primary goal right now is to find a profitable trading strategy. They do own some of our stuff, which is awesome. And they ask, when are you always live? So great question. So you can always find out when the A1 Trading Show is live by going to a1trading.com. Once you go to our website, you can bookmark our website, explore all the free stuff that we have. We have free courses available, etc. But this one right here, this A1 live stream in the top right hand of your screen, click that, and you can always check in on when we're going to be live and who is going to be live. So up next, I'm going to pass over the show to Ivan to take over for a few minutes. So you can see we're 1 minute late. So apologies to Ivan. What we'll do now, thank you guys for the questions. And there's where you can find the future live streams. We'll pass over the show to Ivan in just a second. After this quick break, stay tuned. We'll be right back with him.
Attention A1 Trading Show fans, if you're interested in getting free access to the EdgeFinder or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
I have never seen any trend lines on my chart that makes perfect sense. And I used to do that back in 2013, sorry. Or 14 probably. Or probably 15, but somewhere along there, it was miserable. So Paris or Alan, aka Lee or Ballout, if you guys make me laugh today, I'll laugh, and you guys will ruin the stream, okay? We got a deal. Boom. So there is that. Kind of where I want to start today. I feel like Nick has done kind of what I wanted to do anyways. There's a couple of things that is concerning me. Was over the weekend I heard that, not that it matters, but Trump wanted to put on 100% tariffs on foreign made films, and that could be both a blow to the film industry, both I would say locally and internationally. I have to see how that one plays out. That's still, just to calm you down, that doesn't really drive the markets today, I would argue, but it's pretty funny. But yeah, and then Alcatraz. Just gonna say that. In that situation, we had a Bank of Japan meeting on Thursday last week, as far as I remember. And more than anything else, they were like, "Well, we're not going to raise any interest rate anytime soon." So we had a bit of a bearish outlook, or a bearish reaction on the yen, and yen is by COT. Before this, we were still, or market was still very long. So just have that in mind, that this data is from before that meeting. And secondly, that we are still very short Swissy. And not for the obvious reasons, other than they are doing absolutely horrible economically. I failed astrology in class, Ellen. Oh, okay. Okay. If you make me laugh too much, I think I have an infection or something, because like it hurts. just laugh a little. Yeah, I'm definitely favorite on A1 team after James Allen, Nick, Tom, Marco, and Chandler. So I'm last. Thank you. That makes it hurt a bit less. Okay. So, yeah, you won. So to me, right. So what did I say? Well, it was supposed to be yen pairs. So okay, we have arguably a bit of a bullish New Zealand yen, a bit of a bullish Swiss yen, a bit of a bullish bullish CAD yen, and a bit of a bullish Aussie yen at the moment. And I have talked about the opposing thing for quite some time. I've said, hold on, we have risk-off environment going into May. And we haven't really seen that yet. We have gone higher. We have risen. We have been risk-on ever so slightly. And I don't know where I saw it, but somebody said that they were in a dollar Swissy trade. And I was wondering, what do you do, right? And I think it's pretty easy for me to say. I feel like Nick was a part of it, but also in an idea that it doesn't really matter what your entry version is, as long as your foundation of why you're doing what you're doing, right? So, what is the problem with the yen move here? And that's why I am going to advocate for a specific direction. But in this, at the moment, I would argue that it's pretty much both ways. You can say seasonality is strong, we're going to go lower. You're going to say fundamentally we are going to go lower, but on the yen pair. Or you can say that Bank of Japan said, well, we're not going to go anywhere. We're not going to, because the reason for why we would why we would buy yen is because there is eventually going to come a higher interest rate. But currently, they don't seem to be in that team. Second of all, I just want to double check that before I talk anything more. Did something just happen? I feel like the yen pairs are falling a bit more than I like. PMI 50.8. Okay. Okay. So there's a PMI there. Didn't see. Gold has been so dodgy. Yeah, of course. I can't trade gold from Webull as a USA client. Anyone helping me with that? I cannot. I have no clue. Okay. So that is S&P Global open services in 7 minutes. S&P Global is the one that I really want you guys to be following. The other one, which is it stands. It's completely. S&P Global is the one that you're supposed to follow. That's the most important. That is the one that is closest relationship to GDP, because this explains 90% of GDP normally, and it's currently going down to 50. That should lead to, if anything else, a dollar weakness. That should lead to euro dollar going higher, Australian dollar going, New Zealand dollar going higher. Okay, we are good so far. Okay, but it also leads to yen strength. So back to my theory here. So what I'm saying is, it doesn't really matter the direction. And if you have been bearish on the yen pairs, you have had your chance here, and you may have had your chance here, but you get kicked out. Now, this is all me and all technical analysis, okay? I will be worried as a buyer if we break a technical higher low. So this currently is okay. That's all great. Okay? So it doesn't really matter what you're thinking, because that should be your jumping board. You know, when you jump as a swim, boo, higher, that should be your bounce. Or as a seller, you're thinking, we break. Okay? Technical analysis done 101. No trend lines involved, no EMAs involved, no ICT, nothing. But the strongest force is always going to be your brain. So in this case, and what I mean by that is, what is your analysis? What is your ability to say, okay, what is your ability to differentiate fundamentally, seasonally, sentiment, and now the risk of Trump sending the market down, sending it back up again? And I would argue, as it stands today, that we are more than likely to fall on Aussie yen. And I think that's going to be the case. And that's going to be the one that is not going to work out in the end. And now you can come back on a Monday next week and say, hey, haha, you're right, you're wrong. What's Aussie going to 1.50? Huh? 0.5? That's a bit ridiculous. Okay. Like, what? Like, how far is that down? Or is it 65 or is it 0.5? Because that's where you want us to go now. So that's about 1,500 pips. You want to do that? Hi, man. I don't see that happening, to be honest with you. I don't see that happening. 24/7 betterment. And the reason for it is that means a complete collapse of the Australian dollar. And you need to take strength into dollar like series. But okay, that might happen. In the only way that could happen is that we are going to see CPI going absolutely bananas. That's the only way. And the only way for me to check that is to go into here and say, okay, US heat map was CPI at the moment 2.4. That is, we actually went from 2.8 to 2.4. We are not even close to go astronomical, which would be 3, 4, 5% for that one to turn lower. So far, I don't think that. But if you meant 65, which means just about 20 pips higher, absolutely, I would agree with that. Looks like dollar currencies pairs are consolidating, Adam. I absolutely 100% agree but disagree. We have risen quite a lot on dollar pairs. We have done a lot on dollar pairs. But on the flip side of it, we are having a bit of a pause because it went so fast, so quickly. Now we are reconsolidating, and then it will, because we need liquidity. You know, you need Ivan to start selling New Zealand dollar down there, and so that the market can continue higher. And the most important thing is that is, you know, a new lower low. And thinking that is the only way for us to continue higher. And the reason for why we're having this range, as you would say, is the velocity here. And I don't know where this come from, probably 90s again. There is the law of regression. So you are, what do you call it in English? So if you go 1 percentile higher, or 1 higher, 1 lower, that's okay. That probably wouldn't be pull back. And then if we go to 2 percentile, we definitely have to pull back, go back and revert back to the mean. And how do I know that? It's because why on earth, okay? Why on earth do we rise, for that matter, 5 or 6% up and then 5 or 6%, 5 or 6, and then the exact same pips down again? Why did we go 350 up and then 350 down again? It's because generally on New Zealand dollar, Euro dollar pair, Aussie dollar pair is 350 or up to 500 for that matter, or more. But if it goes above 300 and it does it in less than or about 2 weeks, this happens in 1 month, that's pretty much okay. But if it does it very quickly, I tell you, it does come back rather hard. And this is another one where it went from top to bottom in 62 days, but from top to bottom, okay, this is the same price at least, in 44 days. So it's elevator up, lift down. Oh, you guys need to tell me. I am sorry. It's good. Okay, we'll reverse back up again. Yeah, is it good? Yeah, it's okay. Yeah, I told myself not to check here or check chat today because you just make me laugh, and I can't laugh because I'm sick. But yeah, sorry. Okay. Yeah, okay. Yeah, it's okay. It's how the world works, right? Fed. 2 days left. We have seen considerable weakness in the economy. I think that we are maybe coming into more rate cuts again. Because we are down to 2.4. GDP was negative. Well, NFP was pretty much all right. So yeah, laughter is the best medicine. And Adam, how long do you know me? I've been here since 2013. How long have we been together and trading together? When's the bill somewhat dovish? Yeah, I believe so. That's kind of like my primary thought, and it seems to be the primary market thought. And what do you tell me? I told you that we were going to go higher on dollar again. There we go. Boom. About half an hour. Okay, Adam. I am the clown here. Every time I come here, people are like, why is Ivan so unserious? This is a clown. Send him back to where he came from. He's just laughing. What is in his what is he high on? That's generally the most normal comments that I get. So yeah. I wanted to advocate for this Euro New Zealand short, but it turned around a bit earlier than I thought. So that's on my game plan going forward if we have some kind of pullbacks. I was on the dollar Swissy attempt of a trade, but it has only made the number one, which is the most aggressive, most risky trade, and then in a higher high, higher low situation. And I haven't got that yet, so it's not really a confirmed public trade yet, because a trade that that I'm supposed to be taking, because this is number two and it hasn't been confirmed. It hasn't happened yet, so didn't fruition yet. Yeah. Okay. Basically, you're saying keep quiet, Adam. No. The more you make me laugh, the more fun we have. And I'm mostly the one with the laughter, and you guys have the jokes. I don't know why. I like laughter. I love laughter. That's just been my I've been trying to push this into chat. Like, we have to be laughing, chat. And chat is like, you are too earned serious. So there's that. Because I'd rather just not cry. Somebody said dollar yen. I'm like, I haven't looked at that in a long time. I don't know. I'm confused. Because that's bullish. And this one in my mind is like bearish. But so yen is weaker than dollar type situation in the weak situations. I can't tell you for free where I think this is going to go. Do you know why? Because both is weak. Have you ever tried to punch what's weak? Have you ever tried to toss jelly as a snowball? It just disintegrates. If I celebrated Polish holiday over the weekend, no, I didn't. How did you interpret the newsprint? Very easy, straightforward. I want to be above 50. So the actual number, then the difference between the expectations and that is bear. So that's okay. It's above 50, so it's ever so slightly bullish, but it's lower than expected, lower than last time. So the trend is bearish-ish. And yeah, so those three: actual versus versus expected, and then the overall trend, which is bearish on this one, and then this one is above 50. It's a more bullish trend, but I would argue that this one is closer to GDP than this one, so they kind of equalize each other more than anything else. But yeah, so three things that I look at, and it's pretty much okay. But it was worrying that paid prices rose quite rapid, and it's quite high as well, and that the new orders unemployment index is is higher than previous, but rather low. So that makes me worried. But overall, we are around 50, give or take. We are ever so slightly above contracting economy going forward. Euro yen to 138.59. Better mint. I'm not laughing off you, but what? Where? Okay, I'll take it. Remind me in about a year if we did that, though. That'd be great. We rarely get snow in the part of the UK. Yeah, I'm Snow White, so you guys get snow every day with me. I don't know. I haven't any decisions on Urian at the moment, other than the risk off going into May. 51.6 is it's okay. It's okay. Nothing positive, nothing horrible, but it's okay. It's what it's what a good it's what a good black coffee tastes like. And or normal. Sorry, nothing else, just coffee, water. What is my thoughts on US30? Well, US30 is the same thing as S&P, same thing as Nasdaq. For me, it doesn't really matter. Bullish, and see if I'm not going to tell you to see if you can find a bottom, but see if you can find a pullback or anything. But yeah, the risk that sent this thing lower is gone. The market thinks we're going to be great, we're going to be happy, we're going to be, because we're not making low lows. 7704 woman, I love you, thank you, boom. And the reason for it, we're not making lower lows, is because the market and I don't believe that we are going to have another tariff war / crash / whatever. And we have seen Trump talking positively about reducing tariffs and whatever that means. Doesn't mean that it can come new, but at the moment, as we stand today with our risks, tolerances, and everything, money is being put back into S&P, to Nasdaq, to whatever. So far. Secondly, to that is, are we going into a recession? Are we going into crash market? Are we going into whatever horrible things? Are we going into 1930s? What I am worried about, and what I've seen reports about, is it's getting dried up in the docks in Houston. That a lot of ships that was previously full now are fewer and lesser, and they're not as full as they used to be. And that basically this trade war scenario has just made a lot of US goods and goods left in China, so there's nothing coming over. So that's a shock. That's another 2020 shock. That hasn't been priced in, because the problem there is that it's, well, we're going to see it through reports, through earnings. Because one thing is, well, when we have discounts on the items and stuff, but then you get income. But now there's no income, because there's not practically no goods being sent. But when you have no goods to send or sell, it doesn't really matter what the tariffs is, or whatever your guidance was, or whatever. You don't have income, flat or flat, doesn't matter. And it doesn't matter how much you cut, because there is no income, because customers are not going to pay for anything they're not getting, right? So that is potentially the next bearish trend, but that doesn't start without having actual proof or beliefs in the market that we are in that scenario. So until then, we are like Tussie from Winnie the Pooh, whatever she is called in English. I don't know. What is she? Is she a hippo? Hippopotamus? Donkey? No. Just, take life with a relaxing, going forward view of life. Are we in a stagflation environment? I think that is stagflation. High inflation, stagnant growth? No. Because we don't have high inflation, we have low inflation or falling inflation. And we have okay inflation. 2.4 is okay, is where it's supposed to be. But growth going into negatives, well, then you don't have growth. So is that stagflation or is that... What is the other one? I should have matrix. This is an economic. What is it called? This thing? That one probably. So low inflation and low growth. So deflation. Probably then. Because we don't have growth and we don't have inflation. So this one more than anything else. You can argue with stagflation, but you're more into a deflation situation. So since we went from 2.8 to 2.4 inflation. So I think that Powell on Wednesday is going to be very concerned about that situation at the moment. Bitcoin has one more leg down to 62. Okay. I can't take it anymore. Can we do gold? I'm bullish on gold. I'm bullish on gold. And I think it's, at least right now, has come up to some kind of resistance. So if you can have a pullback, do something in that direction, great. Okay. And then oil, downtown. There's nothing good about oil at the moment. And we had another low now opening on yesterday. I don't know if that is what we are thinking, but with Saudis producing more and America unleashing their, what is that called nowadays? It's called the National Reserve Oil Storage thing. Yeah, they're trying to flush people out, okay? I don't know if it's Russia, if it's Europe, America. America has one of the higher costs of production. Russia, for that matter, also Saudi, but Saudi can produce at a record low. They don't need much, but for them to fund their state agencies, well, yeah, they need higher than 56. So right now you're about break even in, I think it's Europe, North Sea, about 56, probably 60. I don't know what the actual cost is. So right now we are going into closer up to and about break even on production in Europe. So it's not fun. It's not fun. China's in deflation right now. I believe you haven't double checked that. Ivan's left is nonstop after reading. Thank you, Cedric. I love you too. And Natigasi have a bit of a pull, have a bit of a reverse up. Not that a reverse. That's a rebound to 364. Okay, all right, I'll take it. But 3 was a good level to look for a buy at least. But I think this is overall is going to take a bit of a lower turn. The only problem with this is going into this summer. I don't know, I haven't double checked. That is the nuclear electricity production in France and Germany, how that is looking. Because they're using gas to fill the gaps. And Norway, for that matter. Not that we have much, but they're using gas to make sure that you always have enough power and the less nuclear and wind and all the other energy mixes that you have in the energy mix. Sorry, this is kind of what is left over to fill up the gap. So the more you spend of this, the more you need. So the more you spend of this, the more you need. But also, I saw something about Europe wants to ban buying Russian gas by 20, 8, 6, 7. I thought they had done it already, so that's how much I know. But nevertheless, it's cost effective to in Europe at this point, and by all means, it's still pretty much high. Going back to S&P, I haven't put an order in this week on this one, so if it can come back a bit lower, that'd be great. Other than that, I believe that the Wednesday was a greater buying opportunity. That was GDP probably. So yeah, we'll just say, whoop 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 whoop. If that's not there's no trend to this. It's just, can you find a level? It's price based. Can you find a level that makes absolute sense to you? Then yes or no. Are we breaking higher or breaking lower? Yes or no. Simple price action. That's all I want to. That's all I want to do. What about gold? I did gold. I want to have a pullback on it, Adnan. Bullish again, short term at least. So that makes me happy. And I am uncertain about Bitcoin. I thought it was going higher, but then it didn't follow through. So I'll be question marking it at the moment. The ability for it to go higher, but it's also just a news flash away from going higher. So there's that. Tibet laughing because we love when you laugh. Oh, Santana. So yeah, it's very easy, straightforward, nothing crazy. Just come back to 3271. Yeah, that's about right. Easy be slim and squeezy. And then also it looks like this in my head, right? And then if that is too much risk for you to have done to 3,200, I don't care. You shouldn't care. Nobody should care, because you can't trade if it hurts your feelings and be like, I can't do it. That's too much. Then don't do it, for crying out loud. And if you only have like $5 per ounce kind of a stop loss, then I don't know. Then you have to go into micro, like saying, okay, when it turns around, and you're thinking, oh, that's a new high, that's the highest previous high. There's your break. Okay, then you wait for it to come around, and then you extremely aggressively look in this area, or if that matter higher, high, higher, low, there is your entry, or there is your entry. Doesn't really matter to me. But that's a bottom on top of a bottom on top of a bottom. So on that chance, New Zealand dollar probably, yen pairs going into risk off mode. I'll look into it. I'm very happy with what I'm seeing. I want to see lower lows and lower highs, though you can take both directions. Doesn't really matter to me. Just stay and stick to what you believe in. What is more important? Fundamentals, seasonals, sentiment. I have said what I think is best. We will see by the end of the week and end of the month, okay? I love you, family. I'll laugh until I die. I hope I don't die tomorrow, but until then, I love you. Boom.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else, and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. Good morning, everybody. Happy Monday. Welcome back. Just had a couple levels here on SPX this morning. We gapped lower. I think the market's going to be pretty range bound today, maybe quiet, maybe a bit of a sell-off. We did have 9 consecutive closes higher. So if we go into, the futures market, we had a lot of green candles in a row, starting with this April 22nd. 1, 2, 3, 4, 5, 6, 7, 8, 9 candles in a row. First time in 20 years that we've had that type of consecutive run. So was expecting a bit of a pullback. Friday before the market closed, I did put on a synthetic short on MES, which was I bought a put at 5,700, sold a call at 5,700, and ended up grabbing about 30, about 30 points last night on that trade. I'm out of it. It's pretty early. I just didn't want to take the upside risk, but it cooperated right away, so I grabbed it at a few bucks there. And then this morning jumped in and did some selling on SPX. Worked out pretty nicely in the first about 30 minutes of trading. Maybe it's all eyes on the Fed for this week. We did have ISM numbers coming out this morning. It was ISM services for the U.S. came in slightly better. 50.2 expected. Previous 50.8 came in 51.6. Tomorrow, no major news from what I can see. Unemployment or employment news coming out of New Zealand. After that's actually Wednesday's trading day. And then Wednesday, we have the Fed with rate decision, with press conference. Probabilities have shifted a bit. So Jerome Powell and co. likely pausing through May, looking like they're going to pause through June, and possibly a cut starting in July. A big narrative shift over the last week or so. We're staring at this market. We're back above. Let me go to SPX here. So we're back above Liberation Day levels, right? So here's our, support. We had our flush down Mag 7 rotation, 2-week pullback, and it was the flush lower. There's your Liberation Day announcement. So the market is safely back above Liberation Day announcements. Now that's the stock market, okay? The issue that I have is that, stock market's above Liberation Day levels. That's fine. I don't think it'd be difficult to see if we're going to form a pattern here. Left shoulder, head to neckline. This might still be working out a neckline. It might also have this could be the intermediate top and we pull back a little bit. That could be our neckline. So I don't think we're going to be, blindsided by oh, wow, I can't believe this bullish move. It's well, we totally can. If we pull back into a right shoulder, I mean, I sometimes you got to give the market a lot of credit for being as technically obedient as it is. This was a, previous all-time high that became the technical support. That was a bottom in all this chaos, right? If the market comes up here and forms a neckline, well, that was resistance on the right-hand side of the trend line. That was resistance there. It was resistance that became support right here. So if the market pulls back, is it possible we pull back and just use the backside of the trend line and some gaps to then offer up the right shoulder? Maybe, So if it's left shoulder, head to neckline, pull back for right shoulder, find a gap in here, high or low, measure that move. I'd probably measure symmetry, and I'd be a little bit more aggressive adding trades into, another push to the upside to see if we actually can get back to, 6,000 or 6,100. I'm still cautious to the downside. I still have hedges to the downside, but now I'm kind of anxiously waiting to see if I can get a dip. Most of what I'll be doing here the next couple of weeks, probably the next 30 to 60 days, is focused on just selling calls, either stocks that I own or looking at some positions where I might just buy the stock, sell a call, and sell an in the money call and try to grab a couple of bucks and generate some income. I don't know if the market's going to have a nasty week. If we go to the weekly candles, we've had 1, 2, 3 out of 4 weeks green, and it's obviously been a big recovery week since April 7th to the 9th. Right, so the 7th was the bottom, the 9th was the tariff pause, and we've had some pretty strong upside since. So anyway, in the bigger picture, the integrity of the bull market is still there, right? I mean, we still have a bull market. 200 moving average on the weekly time frame. All this was supported even through the 2022 bear market, and even the flush out we had here. It's offering a lot of support. I'll continue to say this: nothing good's going to come below. If we break 4,800 convincingly, nothing good's going to happen. But if we can maintain, basically this being the floor for the year, then it's possible that the market might be noisy, but I would say the market's going to do everything it can to kind of grind higher. So to me, that's a little bit easier, is to at least have hopefully a clear path to all-time highs. I just hope we have opportunities to kind of scoop up some dips, and we might have some noise along the way. But I would say that for right now, this market is looking a little bit more poised to try to stay bullish. It's going to slow down, though. I don't think the volatility is going to be nearly as chaotic and whipsaw and kind of parabolic as it was. we could still have elevated volatility, but I would say not so much. The one thing that I am concerned about, and I think we need to pay attention to, is the 10-year yield, because with the Fed changing their probabilities here, this is a pause. Okay, this is a pause for this week, Wednesday. So about a 97% chance Fed does nothing. This is a pause, about a 68% chance they do nothing in June. And then the first rate cut would possibly be in July. Now, why would the Fed cut rates if the market is on its way back to all-time highs? Why? Why is there a need? Is there a need for the Fed to cut rates at all? Do we have to cut rates? If we're sitting at all-time highs with a resilient economy, why the heck does the Fed cut rates? Is it the liquidity air pocket? Is it the refinancing? Well, I mean, I understand why they would want to cut rates to lower the, the debt cost, right? Servicing debt at, 4% or 3.5% or low threes is a lot different than 4.25, 4.5. But the world has to refinance on 10-year yields, roughly. So 10 to 20-year yields. If you want to buy a car, you want to buy a home, all of the major borrowing timelines are going to be based around these. And just like we saw last year, this is the one unknown that I have going into 2025 is if the Fed starts cutting, are we cutting rates and the bond market still goes up? Like the bond yields still go up? Because that's not a good thing. This makes the US to me look like more like an emerging market situation where we would have higher yields to attract back foreign investors, and we're watching essentially our bond market break, and we're still getting a weaker dollar. So anyway, I don't know. I just think it's weird to see the Fed. Why would they cut rates at all if the stock market's near all-time highs and we still have sticky inflation? It's not like inflation's going low, and we don't have yields that are really cooperating. So if the Fed cuts and this does not go down, if the 10-year yield, 20-year yield does not go down, that is a problem. Because the only time the 10-year yield, 20-year yield was going down was when the market was literally breaking, right? That was the big correction. This was our, dump for the beginning of the year. And yeah, yields are dropping because everyone was worried. Everyone is going, there was a fleet of safety, but then that basis trade broke. So that to me is now the big unknown for 2025 is why do they have to cut? If they do cut and the yields react different like they did in September of last year, I have a lot of concerns moving forward to the longevity of a bull market. I think we would end up probably having some, what would be a very ugly, difficult pattern would be something like this. And this is what has happened since 2018. And it wouldn't surprise me if we go into another cycle like this. Let me make this a little bit bigger. So connect the lows here, connect the recent highs here. Let's say that, we do make all-time highs and the Fed cuts rates. Why are we cutting all-time highs? I have no idea. Why are we cutting into a resilient economy versus a weakening economy? I have no idea. But I could see the market doing that. And this is the same thing as 2015 to 2016 when the market was sideways for 20%. This is the same thing as 2018 to 2020 when the market had a volatility event. So with 2018, we had a crash, rallied all the way back up. We crashed again, rallied all the way back up, crashed again. So in 2 to 3 years, multiple times, we've seen the market actually return next to nothing unless you time the market. Make sense? So anyway, we'll see. But top down, things are lower today. It's fine. I mean, I think any dips, I'm interested in still buying dips. Where at? I mean, I'd love to see a pullback realistically towards like 5,500. If we get a pullback into this gap between 50, I'd say 54 to 5,200. This is SPX. So between 54 and 5,200, I think that'd be a pretty nice opportunity to, if you are long, define risk there could work out very, very well. Also having some potential hedges in case it wants to come back down and revisit lows. But there's a couple ways to play this. I mean, I might be looking at strategies where if we get into this window here, I might go out 6 to 12 months and do a very cheap call spread. Maybe doing like a, out of the money call spread that like 56 to 6,000, pay, maybe 20, 30% of that max profit. So if I could risk $300 to make $1,000 and scale that up or out, that would be one way to look at it and see like, well, hey, if we get to all-time highs by the end of the year, that might be a good trade. So That's what I'm watching for. All right, NASDAQ, let's work our way down. So NASDAQ, we have some measure moves. Same thing here. Obviously we have some gaps to fill. We have some pullback levels. We have some gaps to fill. Okay, so if we have a little tiny gap fill, I'm not super excited about buying that dip. If we pull back a little bit more meaningfully, 18,800, 18,400, more interested in that dip on NDX, right? So somewhere in here, I like that as a higher low. Connect these lows. It's probably going to be a trend line bounce. And then we'll see if this is a bullish pattern. If this is a left shoulder, head to neckline, right shoulder, try to find that higher low. Market carves out a bottom, gets back up to the neckline, breaks the neckline, measure that move, and all of a sudden we're looking at all-time highs coming together. Not bad. Okay, Dow is now back above the Liberation Day highs, creeping up into that 200 moving average. That's probably a good thing. Yeah, just playing catch up. Russell's at 199.47. I actually have some calls on Russell at 200 that I'm looking to roll. VIX it was up on the morning and it's starting to go flatter. So we'll see if VIX can if it settles in sub 20, then we're likely looking at some more melt up highs. Bond volatility is decreasing, which is a good thing. Dollar index, I think any rally in the dollar is probably short-lived. I've said this, the 101 to kind of 102 handle on the dollar. If we just slowly kind of pull back to that level, watch for a nice clean trend line, break of the trend line, and then it's pretty simple. If we go a little bit higher, try to draw a nice trend line break. If we break the trend line, I would sell the dollar. If we pull back to retest, I would sell the dollar again. Area 1, area 2, stop loss would be like 1 ATR higher, and try to avoid some type of break of that trend line. But if we then sell off and hit fresh lows, hit some symmetry levels, we're into a weaker dollar. There's good risk reward, good reward to risk rather in that position. So I just don't think that the dollar is the time to short. I think we're still going to have a bit of a pullback and a near-term recovery. Okay, oil. Oil had some drama over the weekend. So we have natural gas hold on to gains. This is 2 hours ago. OPEC looks to hike supply, so there might be some increased production coming in oil. This is why I said I'm really picking my battles in oil. I do have a long position on CL, so I'm long on oil futures right now, with a position that basically, if we don't break these lows, then my position is going to be okay. But if we are heading lower, then I'll take a small loss. I have a trade that's set up to make about $650 max profit, and my risk is about $650. So it's a 1-to-1. It's at the lows. We'll see if these lows hold. I'm not shorting oil. I'm looking to see if like this, kind of April 9th move that kind of broke the market, April 7th in the stock market. April 9th, we had the big tariff announcement. If this low holds, then I'd like to see price range bound and hopefully see, CL make a few bucks. But that's it for oil right now. I still think possibly range bound. If this floor continues to just get beat to the downside, there's really not much stopping oil into maybe this. I mean, the scary part is how low do we go? I mean, oil becoming unprofitable isn't that far away. Like when companies don't want to go online because it's no longer profitable to be drilling oil. I mean, in the U.S., that's probably around 55 to 60 bucks a barrel. I know that the U.S. and Saudi Arabia can have lower prices and still have some margin, but nobody's happy operating at like paper thin margins. It's expensive to turn on. It's expensive to run. Certainly new projects, and it takes years and years and years to get these things up and running. So, just the constant back and forth and disruption to supply and demand can be, wreaking havoc on prices. So, but I still think, bigger energy and non-correlation. I like energy for that matter. We're talking about this build out in AI, talking about, infrastructure, electricity, alternative energies, nuclear is getting some love these next like 12 to 24 months. But oil might be, kind of a perma bear case. I'm not sure. So, define risk on oil, nothing crazy. I'm not making any bold predictions. Gold and silver. Gold is catching a bid. So, well, we pulled back to a 21 moving average. It's still not deep enough for me to say I'm buying gold. I mean, this is the daily chart. I said at least a 21 period. Well, I got it. It just wasn't enough. I was looking for a high, low, lower high, lower low. It's still possible we have a flat pattern here. So if this is a little pullback, come back and find that flat pattern, and then sell back off to find a measured move around 31.38. I'd like to see a round number around 3,000. Obviously, the deeper we go, the more attractive gold looks to me for a longer term position. But gold caught a bid. So I'm not buying it this near term. I want to see some deeper pullbacks. I'm willing to stay patient. It might just be sideways right now for some consolidation. Silver, fine. I'd still be looking to add more positions to my silver exposure. If we come back down to 29 or come back to 26, I'm looking to stay long silver. And I still like the technicals on silver better than gold. Bitcoin, bit of a pullback. I'm not, well, I suppose I could adjust this. We just kind of drifted higher for a couple of highs here, like that little fib high. I'll go ahead and make the swing right there around 97, almost 98,000. And now if we pull back to I'd say 50% pullback would be a good spot to look for on Bitcoin. If we pull back to the 50% and we head back into highs, that could be a good swing trade. So swing, pull back, swing back up, push to symmetry, maybe 107 to 108. I've said this the last couple of weeks, perhaps Bitcoin is going to be another consolidation where it goes up on a push, consolidation, but later on, I mean, it's possible in 2025 we still make all-time highs. But I obviously would like to first start with a dip to buy. And if it hits a target, I might take some profit off the table there. If it breaks the highs, I'm looking at the bigger picture swings. I've got like a 125 to 145 measured move on Bitcoin this year. Well, I'd say I've got a 125 to 145 measured move. I don't know if we're going to hit it in 2025, but at least it's out there technically making some sense. There's a 120 to 125 cluster. There's a 136 to 145 cluster. There's a measured move for symmetry at 132. So, if we can clearly break 109, then yeah, I want to see some higher highs. Okay. MicroStrategy have a bit of a pullback. They had terrible earnings last week. It doesn't even matter because they don't trade like a software company any longer. They trade like a Bitcoin. So I still have it covered into June. I might still, sell some calls. My break even on MicroStrategy is 254. But it's volatile. I get it. We were down here towards 245 or so. I mean, so even if I did see price come all the way back down, I'm just going to continue to sell calls and lower my cost basis. Coinbase hanging up above $200. Ethereum could be close. Ethereum could be a good story here in the next, maybe, I don't know, maybe the next month. If we break the right side of this trend line, Ethereum might look a little bit better. I would say to be safe on the daily time frame, you're going to want to see Ethereum get above the 200 moving average. So we'd like to see it break the trend line here, get back above the 200 moving average, look like there's a convincing bottom, and, upside potential is good. Reward to risk could be favorable. So we get on the right-hand side of the trend line, small risk below the U-turn low, and upside potential would be retesting 4,000. Copper, I'm going to stay out of copper for right now. Just a massively disruptive high and low. That was, what was cooking all-time highs and a 25% drop. Certainly put the brakes on and just screamed volatility. So I'm like, yeah, I got lucky on that little trade. This was up, I don't know, like $1,500 at these lows. It was threatened for it was about 2 weeks, and then settled in and took full profit on it. But I'm not trying to pick bottoms or do anything silly without defined risk. Japanese yen clawing back a little bit. Let's take a look at currency strength for the morning. So Friday we had the Aussie and the New Zealand. Today we have the Japanese yen on top, New Zealand and Aussie as well. Swiss and Euro baseline, pound baseline, dollar CAD still weak. So I'm still holding two things. I've got the EWJ, which is up above some fresh highs. So my EWJ position, which is just holding the Nikkei essentially, EWJ is up around 2 grand. So I'm just going to hang out of that a little bit longer. This was a nice way to play the crazy collapse from July to August. Put in a couple levels here. This is actually filled. So that was, these are 2 levels that I bought. So I did a $1,500 allocation, buying this recent breakout and also, buying the lows from August 5th. And that puts my break even right in between. So break even's about here, off and running. If we make some fresh highs, hooray. I'll just ride this thing out as long as I can. This is also a, kind of non-US play. DAX, freaking unreal, man. It's up 26% off that crash. So good opportunity to buy. I didn't do it. I sold premium on FEZ. That's about it. So, I mean, I'm going to make some income on it. There's not really much to do. I'm going to make about 300 bucks. Hooray. As opposed to, if I bought it at, even 50 bucks, be up $6 or $7 a share. That'd be a lot better than just selling some premium. FTSE doing the same thing, just back above the 200 moving average. What was a crash looks pretty encouraging now. I'm going to stay out of Argentina. China also looking better. Like we're still getting this move that's non-US. Europe looks good. China looks good. Brazil still hold above the 200 moving average. Latin America still hold above the 200 moving average. Non-US. Mags. Apple is down a little bit today. I took an earnings trend Apple that closed out for profit. Apple down to 198. Earnings play where I needed price to get below the blue line. It did. So I grabbed about a 20% winner there. Mags. I wouldn't mind seeing a higher low on Mags. If we get a pullback here, kind of the same situation, is this going to be a bullish pattern? Maybe. Is it a double bottom? I mean, I will say this. Why would it be bad to own, Microsoft, Meta, Google, Tesla? Like I suppose like Apple, Nvidia, maybe the more uncertain of the Mag 7, just with their exposure to China. I think Apple could have some struggles. Innovation on Apple seems to have slowed a little bit. It's just like, yeah, you buy a computer, or you buy a phone, that's Apple's innovation. But I know the company is more than that. I mean, whatever Apple wants to do, I'm sure they can dominate if they want to. If they want to spend the time and resources to do it, I'm sure they can find a way to dominate whatever they choose to do. But right now with having this trade war with China, I mean, Nvidia and Apple could be the 2 Mag 7s that may not perform very well. So do I want to be an independent stock picker on Mag 7s? I still like Amazon a lot. I still like Google a lot. I still like Microsoft a lot. I still like Meta a lot. Problem is those are expensive enough. Like Amazon's not bad. It's, $180 or so, but Meta is over $400. Microsoft is now over $400. Meta's $600. So it's like, those are expensive. If I want to trade options around those and I want to trade that with at least one contract, that's an expensive play. So I have to either dollar cost average, or find other ways to trade it. So Netflix is still creeping up to all-time highs. We just pulled back a little bit, but this is why I didn't want to call the top on Netflix. One thing that's probably not tariff affected is just like, yeah, more streamers, more users, increasing prices, adding different tiers of subscriptions. Nvidia, making a comeback. We're still below the 200 moving average. This probably needs to be overtaken at some point. Tesla at 276, possibly a range. But like I said before, I just like selling premium right now on Tesla. I closed out this May 16th was for profit. So closed for profit. So I closed that out for about a 55% winner. And avoided the assignment coming into the 16th. But what I do have is I have some shares of Tesla. And I'm going to continue to kind of work through some covered calls. Berkshire Hathaway, wasn't super surprised to see the market dip. They did report earnings Friday, and Berkshire was down. Yeah, okay. So looks like, I mean, from what I saw from the shareholders, so Berkshire Hathaway had an annual shareholders meeting this last week. And Buffett, I think, is officially stepping down. Not like right now, but I think at the end of the year, he's stepping down. They're still sitting on a ton of cash. They have like $347 billion of cash. which percent of assets wise might be around 20% or so. But the point is, maybe a range trade. If Berkshire comes back down to the 20 or the 200-day moving average, I wouldn't mind scooping up some Berkshire Hathaway shares, or at least doing some option trades on it. Probably just to find risk, even if I did a bull call spread down here and try to get price to go my way, nothing crazy. But I am wondering, I think everyone is wondering, like, will Warren Buffett start buying stocks again? I mean, they've been a net seller for a lot of quarters in a row. And I don't know if he's sitting around waiting for just valuations to drop until they pull the trigger. Let me see if there's actually a Buffett. I know there is such a thing as, like, it's basically a metric that Warren Buffett uses. Like, it's his kind of valuation metric. I just don't see it here. There's kind of like you got the Shiller PE, you got the price to earnings multiples, you got the PEG ratio. Like, there is like a Buffett indicator that shows whether stocks are valued, high valued or appropriately valued. So anyway, but I don't think Warren Buffett is pulling the trigger on deploying a bunch of cash yet. Bond market, like I said, legitimate concern watching the bond market falling. I don't think the U.S. has had failed auctions yet. That's possibly the next big uncertainty is, I mean, I don't know. And maybe, maybe there's a line in the sand here. If we look at the TLT, does TLT jump hard off of these lows? Maybe. Looking at the yields here, if you look at, the 20-year yield, I mean, just set a chart alarm on the 20-year. I'm going to do this at 5%. That was essentially what broke the basis trade initially. That's where the Trump put kind of came in with that 90-day pause. If the 20-year gets back up to 5%, is it a time to also look to see some type of jawboning out of the administration? I'm not sure. But the 10, 20, and 30-year yields are all, I mean, look at the 30-year yield, man. These are so volatile right now. That's crazy. I mean, the 30-year yield is up 33 basis points. That's a lot. Average mortgage, 6.76. Currencies, initial jobless claims, let's keep an eye on this one. I put a previous line over these, like 2023 highs. Nothing is happening on the jobs fronts yet that's causing concern. Everyone's talking about recession. Look, we don't have a recession without people losing their jobs. It's always been that way. My concern is that if we start to see job losses, they're not coming back. Like, another recession probably gets to deep recession, jobs that aren't coming back because they're going to be replaced. AI is going to be that unfortunate future, and I don't know if the world is excited to have universal basic income, but it's like, how do you have people that are displaced, that don't have jobs, and corporate profits are like, look, profits and margins are as high as they've ever been? Well, yeah, because you're just laying off workers. Because margins are high, that's great. Congratulations on corporate greed. But doesn't help the fact that we've got, millions of Americans and millions of people around the globe that would be out of jobs. So we'll see. But trend-wise right now, are we going to see this trend higher? Initial jobless claims, it's pretty steady. Continued jobless claims, zoom in on this one. Again, not noticing any real major trends to the upside. Maybe one data point as this is coming in. This is something that prints every single week. So, is this becoming a concern? Not necessarily, not yet. By historic measures, this is still quite low. And then Fed rate still 4.25, 4.5, likely to pause until July. I still don't know why the Fed would have to cut at all-time highs. I said that. Here's China. CQQQ looking okay. Alibaba kind of getting its groove back a little bit after disruption. Baidu, I'm still covered at like 95 and 100. I still like Baidu to the upside. I still like Alibaba to the upside. A lot of asymmetry on those trades. If the U.S. and China can play nice, it wouldn't surprise me if these stocks both do really well. Alibaba and Baidu both have like really good technical measures to the upside. FXI looking a little bit better. JD hanging in there. I've got some covered calls in this one. Schwab dividend, fine. Schwab growth making a nice recovery. So if anybody's contemplating on buying the Qs, this isn't a bad way to participate either. If we have a head and shoulders pattern on SCHG, this pulls back to, let's say, $25, maybe $24. I mean, you can't control the options the same way, but just for a buy and hold, this is way cheaper. And yeah, I wouldn't mind obviously having a run from 25 to all-time highs. That's a 16% run. I mean, I don't mind allocating that, tying up way less capital, leveraging. I can use something like synthetic. I can use something where I can add some leverage via options. But yeah, SCHG, it is probably going to be in the arsenal in the next maybe 30 to 60 days. If I feel like I've got a bottom, I can go after and find on the NASDAQ. SCHG, by the way, is a mix of about 200 tech stocks as opposed to the NASDAQ 100. So it's a little bit more of an assortment. The stocks above the 50-day moving average, you can see we're still kind of clawing back where companies are making charges. We're above the 50-day now. We still have about 59% of companies that are below the 200 moving average. So, market breadth wise, we're still in a lot of stocks are below the 200 moving average. That would still technically be in a bit of a bear market position. But if this starts to get over 50, if this climbs over 50, then we have about half the stocks into a buy zone again. And then how many of those stocks are back above the 50-day as well? Because that could, I mean, it's a lagging indicator, but if we have majority of stocks above the 200 and then a majority of stocks above the 50-day, we're back into buy zones on a lot of stocks. And that probably allows some positions to recover more. Look at all-time highs or stocks on their ways to making 52-week highs again. Time will tell. NASDAQ, here's the 50-day. So this is why I use this indicator as a buying indicator. That was a good timing metric when it came to that April 7th, April 8th, April 9th window. It didn't take long to get rewarded if you were long. So I'll continue to watch that. And at the same time, I mean, who knows? Maybe at the same time, this thing goes all the way back up here. And then it's a good time to be protecting profit because it oftentimes will lead to a short. If we get too ridiculously overextended, where it's like now, 93% of stocks are above the 50-day. Well, there's probably going to be some profit taking or some tops to form. So this works both ways, but it was a good timing indicator to get long. The fact that the news lined up with that, it is what it is. I didn't know that Trump was going to pause tariffs, but it did make sense based on what we saw in the markets that we were at previous resistance becoming support. Market already had a 20% correction, and seeing this, kind of market breadth indicator, the pain was in. So anyway, that's where we're at. Costco, just checking out some stocks. I'll do some currencies here in a little bit. Walmart, I did sell some calls out to Walmart on August. Yeah, I mean, I've got some time. This to me is fairly defensive. Walmart's above all-time highs. The retail signs, I mean, we've read some reports of like, oh, shelves will be empty and this front running tariffs and the negative GDP. It's like, I don't know if it's going to happen. I guess we'll find out. I barely go to the store enough to tell you. I'd say that if I went to a grocery store and the shelves are empty, that'd be a concern. If I went to Costco and the shelves are empty, that's a concern. Something tells me that those retailers on inventory management are not going to let that happen. So, but it could be, retailers could be like Nike could still be in some trouble. I saw like Forever 21's filing for bankruptcy again. Home Depot, I still like some of the bigger levels to the downside. I'd love to scoop up some Home Depot at better prices. Lowe's, same thing. MasterCard, Visa, my gosh, man, what a rip there. Visa also working its way back up. Amex had a ratio spread to close out for profit last week. Healthcare, insurance, Palantir, what a run. Palantir still didn't even hit the 200 moving average, but we were down 46%, and then Palantir from there decides, let's just go up 87% in a couple weeks. No big deal. So for all you Palantir lovers out there, you're enjoying that rally for sure. Carvana, nah, not that interested in a used car company. I think these valuations are pretty darn high. Choppy on O'Reilly, Redfin, Zillow, just looking at the housing market. Uber, crushing it to the upside, took some profit on a 112. Lyft, I'm owning some shares. I bought shares at $11.79. They're up now about $1.30, and hopefully there's some good upside to get into the high teens. If I get a $17, $18, $19 price, I'll take my profit. Overall, Lyft should be up a few bucks. I've got shares for everybody here. I'm up about $2,000 on Lyft. Sector wise, More interesting currency pairs right now. Aussie CAD still doing his thing. I didn't get the pullback that I wanted. I was hoping we'd have a kind of a 50618 pullback in here. I'm not really getting it, unfortunately, but that's okay. We're filling the pocket. I think Aussie CAD, if it continues up, fine. Watch for this pattern though. We have a move here, a little fake out to the upside. We pull back. Two things: either this is the bottom and we go back up to hit this high around 91.50, or we have a move. We're go slightly lower, so just be a high, low, lower, high, lower, low. I'd still like to buy the dip on Aussie CAD to swing this thing back up into 91.50. So I'm just going to wait and see if I get a pullback. Otherwise, if it gets to these highs, I'll take some profit. Aussie Swiss looking better. Certainly room to get up to like 5,500. If it is going to be if it comes back down here for like a double bottom, that's fine. I'll trade the double bottom. That could be a carved out low. This could be a move up here, third wave. As I keep mentioning, like I'm just watching for, do I have what looks to be a pretty safe bottoming pattern to trade? And I will position accordingly for it. Aussie yen, still getting that risk on trade. I mentioned watch those August 5th lows from last year. And if you were a buyer off those lows, it's rewarding pretty nicely. Long Aussie New Zealand, Aussie dollar still waiting. CAD Swiss, oil's dropping a little bit. I'm looking to see if we do come back down to lows, are we equal lows? Are we divergent lows? I'm still looking for a bottoming pattern. Still going to hang on to these trades. CAD yen, kind of the same thing. Watch this level. This one's holding structurally pretty nice. So we could be in some chop, but if this ends up breaking, up, that could be good. If we hold this level, I still think the upside looks pretty promising compared to the risk. But I wouldn't fight this. I mean, if we're going to make a severe break to the downside and the Japanese yen is making a basket run, don't fight this. So if it holds the lows, a lot of upside potential. If it breaks the lows, I'd want to get out quickly. Swiss yen, no trade. Euro Aussie did not pull back like I wanted. I was looking for a swing trade, never offered it. It's just sliding lower. I'm out. Euro CAD, I still like the sell highs in here. I mean, it's really not looking awful. I mean, if you were to sell the Euro CAD here and it gets back to the highs, I'd still sell this thing. Even if this is this could be a big rising wedge that ends up breaking down. So, I mean, be patient if you like the trade. But I still think we're coming back to like 5,400 on the Euro CAD. Euro Swiss, pretty strong support at 92.25. Actively looking for a bottoming pattern. Euro pounds, no trade. Euro yen, no trade. Euro New Zealand, similar to Euro Aussie, just kind of sliding lower. I didn't get the pullback that I wanted. Euro dollar, I'm sure there's some traders still interested. I didn't mind taking a short position here. If it was short 1 and then short 2, I still think this pulls back a little bit more. At least 30% or 38% between 111.50 and 110.50. If I am short euro dollar, I would be out of the trade here with at least a stop loss, trapping profits. And if it goes deeper, that's fine. But otherwise, I think once we have a bit of a pullback on euro dollar, that's a bit of a pullback on the dollar index. Euro dollar comes back down to these levels. I still think we go higher. Bank holiday today, no. It's Cinco de Mayo, so everyone's out on the beach having margaritas. Pound Aussie also, didn't get the pullback that I wanted. I was looking for that 50618. It didn't pull back deep enough. Pound CAD, I'd stay out of that one. Pound Swiss, offering a bit of a swing here. So, maybe this area for a position 1, bottoms for position 2, but watching, this pocket for profit or this pocket for profit. If you want to wait for confirmation, just wait for a trendline break. But I think a little small trades, dollar cost averaging could get you some profit into the 12 and 1,300 targets. Pound yen, no trade. Pound New Zealand sliding lower, no trade. Pound dollar, possibly a topping, bit of a topping pattern here. Maybe a small trade can kind of play the chop and see if this actually does offer a bit more of a retracement. I like euro dollar better. Full transparency, like euro dollar better than pound dollar right now. New Zealand CAD, I'm still long. New Zealand Swiss, I'm still long. New Zealand yen, if you bought the August 5th dip, it's looking pretty good for a couple hundred pips. New Zealand dollar, I'd still like to see a pullback. Either this is sideways for some type of like flag pattern, Or I mean, it's rare to see a pair like this just have a no pullback position. So I'd like to see, maybe a little bit more of a consolidation zone, but previous resistance becomes support. We trade into some open space, and let's see if we can get to like 63.50 on New Zealand dollar. Dip wise, I mean, look, draw fib. There's a low, there's a high. Look at filling in some levels in here. Stop loss would be below this swing. As long as we maintain a higher low, a higher high to a higher high. I mean, a swing to a third or fifth wave would be my profit target. That's all based on dollar, dollar weakness. Dollar CAD, super slow and super choppy. I would just stay out of dollar CAD in all honesty. Nothing gets me excited about this indecisive zone. I would say if dollar CAD continues to slide lower, then sure, let's look at this area to buy low. If we convincingly make a run, back into this space above 3,800, 3,900, then perhaps that's a bottom and we put in another rally to the upside. So it just has to be clear. Like right now, this is kind of no man's land on the dollar CAD. I like buying it low. I wouldn't mind selling it high. It's going to just take a little bit more, price action for me to be convinced I want to take a trade at these current levels. Dollar Swiss, still looking at a pocket fill around 87.70, but actively looking for a bottoming formation. And then dollar yen, bottom's going to feel a little tricky, so be careful. But as long as we don't make like a convincing ATR break below, I think this is still, maybe heading higher and higher and higher. Just a grind, just a bit of a slow grind to the upside on dollar yen. And then we'll see if this level holds, like 149. Support resistance, that could be a topping point. We could still slide lower, but I mean, I don't think anybody would be too super surprised to see the dollar yen just stay in this big range. So it looks like a better trade to be buying right now, as long as price doesn't damage that low. Then there's room to get back into the chop zone and potentially even come all the way back up to this like 155, 156 zone. But if you're long dollar yen right now, I like the 140, kind of the 148 to 149 zone would be protect some profit. Okay. Any other charts, questions? I mean, we have earnings this week. I've got a screenshot. Let me take a look here. Earnings for the week. So some notables. We officially have kind of Mag 7 out of the way now. We have him and hers with earnings after market today. I did close up a nice trade on HIMS. I had a diagonal spread. It was up to 42.27. I had a trade last week that I closed out for like almost $23. I think I paid $17 for it. I closed it out for $23. So that was pretty nice. And I still have some ratio spreads, a 25 by 20. This is a pretty good looking growth stock, in my opinion. Fundamentally, it's due to be way higher. It kind of was a nuts. Like I wasn't that interested in the stock until we were back down to the 200 moving average. So, and what's funny is during the bear market, it's like I bought this stock at like $5, and it's been up as high as $72. So did I take that profit? Of course not. I took a $5 trade and turned it into $12, $13, $14. Huge profit. I was happy with that. But now that it's a little bit more mainstream, it's making a nice little run. I think this could offer up some nice dip opportunities to stay kind of in growth mode. But I wouldn't mind owning shares, below $25 either. So anyway, that was just because we have earnings on it today after market. Palantir has earnings as well. I'm curious if that's going to continue to make all-time highs. So let me just highlight these, some notables. I'll keep an eye on those. Maybe some volatility there. O is a aggressive dividend play. Celsius, I didn't know the old energy company was public. Ferrari, curious if the old 1%ers are pulling back. Let's see here. Constellation Energy, Supermicro, SMCI, AMD, semiconductor plays. Uber has earnings. Okay, Uber earnings, Disney earnings. Barrick Gold. This would be interesting for a miner. Oxy, that's one of Berkshire's energy plays. Dutch Brothers, DoorDash. See if those are growing at all. Carvana. Apple Oven, these are like fairly, earnings sensitive reports. Peloton, Shopify, State of the Consumer, Peloton, probably nothing. What else? DraftKings, are people still gambling? Probably. Buy now, pay later, Affirm. Marathon, that is Bitcoin related. Coinbase has earnings this week. Trade Desk has earnings this week. So yeah, there's some notables. Let me do a quick scan, see what else I can find. What else is super price sensitive this week? Let's go to a little screener here. So this week, 5th through the 9th. What? Wow. So I've got 77 stocks to filter through. No, that can't be right. Yep, it is. Holy crap. That's a lot of stocks to price through. Let me make sure. Let me at least get prices at like $10 or higher. So I'm going to try to filter out some. Minimum volume. All markets. Stock price, we'll say. Okay, so the stock price at least has to be like $20. Now I'm down to 34. Okay, so that's a starting point. Very sensitive earnings on TG Therapeutics, Apple Oven, very sensitive to earnings. Carvana, very sensitive to earnings. Upstart, very sensitive to earnings. Okay, Symbotic Inc., very sensitive to earnings. Lemonade, sensitive to earnings. Affirm, sensitive to earnings. Palantir, sensitive to earnings. Bill Holdings, sensitive to earnings. So yeah, I think we're gonna have some action this week on some earnings plays. That's good. So all right, I'll do some work offline to price out some of those trades. Look for those in the Pulver alerts this week, and I think I'll wrap it up there for my segment. Let's have a good week. Fed this week on Wednesday, likely pausing, but maybe some chop suey until Wednesday, and see if the Fed gets the markets moving a little bit. But a little bit of a slowdown. We're kind of in this like window of like, okay, Fed's not going to cut. We're still waiting on these trade deals to come through. What's the Trump administration going to say? I think the markets had a pretty nice melt up to recover. We're back above Liberation Day levels, but is there going to be a chance to buy a dip? So I hope we have to, number one, we have to get a dip to buy, and then number two, hopefully it's not too awful to take advantage of it. So, all right, have a good rest of the day. See you tomorrow. Bye.
Thanks for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. All month long, you can get the EdgeFinder 40% off, our best discount of the year. Check out the links in the description below to visit the EdgeFinder homepage, or speak with a team member directly to get the 40% off discount now. Trade safely, and we'll see you tomorrow.